What's up, everybody? Welcome back to Trading Wars. So today I'm going to be looking at a subscriber request. I'm going to be looking at Swing Trading 101. We're going to be talking about the ideal situation to swing trade, what it's about, how we take profits, how we enter the trades. And if you're ready, let's step into the war zone. All right, guys. So the most technical way to describe a swing trade is we are looking for pivots on the daily chart or on a higher time frame, can also be a weekly chart. In this case, we're going to be using the daily chart, and we're going to use a lower time frame to enter on a daily chart or a bigger picture setup, and we're going to manage the risk on a lower time frame and try to achieve targets on a larger time frame. So that in itself means that when we enter a trade on a 5-minute chart, let's say, or a 15-minute chart, and we are looking for targets on the daily chart, we're going to be holding it for a few days at a time, or sometimes a few weeks at a time. So this means that we are going to be holding a position overnight. In most cases, almost all cases, we'll be holding overnight. But what we're trying to do is we're trying to leverage off of the tight risk reward on a lower time frame to reap the rewards on a higher time frame. So this can be quite complicated. This is what I would say would be the epitome of a professional seasoned trader. And the opportunities to make insane amounts of profit is the highest on the swing trading, but the win rate will also slightly go down as well, because of the fact that there's less frequency of trades. There is less opportunities when compared to a day trading environment to make profits. So let's get right into it. So swing trading starts with the daily chart. So we have to identify what's happening on the daily chart, where are the areas of support and resistance, and then we need to zoom down to a lower time frame and take that setup and then take targets on back on the higher time frame on the daily chart. So to explain this, I'm going to start off by looking at February when we had the coronavirus sell-off. So it's pretty clear that we could see here that we had a big move down, an impulsive move down. And a part of swing trading is identifying what you expect that's going to happen next in the market. So when we have a big impulsive move down, we generally have a pullback and a continuation of the move. And you could see right here, we had a perfect 50% retracement of this impulsive move. And then we had a continuation to all the Fibonacci targets of that move later on in the month going into March. So that's what we're looking for when we're swing trading. We're trying to identify what's happening in the market right now, where are the next levels of area of support and resistance. And because we had this huge move down, we realized that we could be trending. So we look for this pullback in order to get short. So how do we actually manage this trade? So we could just take an entry right here on the daily chart if we wanted to. We could just enter short below this candle with a stop loss above the high of the 50% retracement, and we could have taken it down to the 50% extension, and we could have made 2.5 R. But the professional way of swing trading is using time frame alignment. So if we go down to a 15-minute chart, which I have over here, we can clearly see that we had a double top pattern set up to allow us to enter this position. So we can see this is the 50% retracement on the daily chart. We can see it on a 15-minute chart, and we have a nice clear double top. So we enter below the low with a stop loss above the high. And if we were to take to the 50% 618 area of the extension, we would have easily made 31R, guys. So this is so amazing. This is what swing trading is so profitable, because even if you get it right once in the month, it can pay for your whole month, can pay for your whole quarter, can pay for your whole year in one trade. So 31R, guys, that's equivalent to 62% of your portfolio. And the initial risk was only 2%, which is amazing. So these are the type of setups that we can get from a swing trading environment. So there's an example of understanding the market is in trend. It's pulling back to the 50%, going down to a lower time frame and executing the swing trade and holding it for a few days. And here we can also now, with all the Fibonacci targets trading and being outside of Bollinger Band, we can see that there's a trend change, long opportunity here with all these wicks coming in, these hammers, and this doji forming right at the bottom. So how could we have taken advantage of that? Again, we could have went down to 15-minute chart, and we would have found on that day we had multiple double bottoms forming right here. And with that double bottom, we would have entered above the high with a stop loss below the low of the double bottom. And that trade, guys, would have still been on depending on your strategy to the present time. And that conservatively would have been a 20R play, which again is amazing. So here's some general guidelines for where we want to be entering swings. So if the market is trending, we want to be entering on Fibonacci pullbacks. If the market is very extended, we want to be entering outside of the Bollinger Bands on either side. So shorting above the band, going long at the bottom of the band. If the market is in trend, we also can be looking for the mid Bollinger Band to be acting as support, 20 MA, as well as the bottom of the Bollinger Band to be acting as support. We can also look for candlestick patterns. So if we have a hammer, for example, we can zoom into the next day, take a setup on this lower time frame, and take the targets on the daily chart. So this is the amazing potential with swing trading. The right way to do it is to wait for the proper setup on the daily chart. So if the market is trending, look for the pullback to the 50%, look for the pullback to the mid Bollinger Band, look to the drop of the lower end of the band before taking setups. So I'll share a story with you guys. In 2019, one of the styles of trading that I did which was extremely profitable, was I swing trade this whole run of 2019. And the way I did it was every time that we came to the bottom of the Bollinger Band or outside the Bollinger Band, I would go down to the hourly chart and look for hammer candles to buy. So I would buy here, buy here, buy here, buy here, buy here, buy here. And this I was actually investing, so I didn't really even have a stop loss. But you could have used a stop loss definitely in all of these situations and rode it back up to the top of the band, to the mid band, whatever. And I did this multiple times all the way up until the big crash of the coronavirus. So that's an example of swing trading as well. So, and in terms of profit taking, we enter on the lower time frame with the expectation to take profits on a higher time frame. So if we had entered long over here, we could be trailing all of these swing lows, all these pullbacks, and keep riding this trade as long as we can. So we could have a winner that's like a 30, 40, 50R winner from a 5-minute or 15-minute bar, but we're trading on the daily or the weekly chart, which giving us huge probability and profitability. So the main thing to remember with swing trading is we need the areas on the daily chart to set up first before we look for opportunities, because we're planning to hold them for the long run. So we need actual support and resistance on a higher time frame. When we're day trading on a lower time frame, like a 5-minute chart, it doesn't matter, because we would just want to get in and out, hit our 2R and leave. And one more thing I want to talk about is day trades becoming swing trades. So this is only acceptable in certain situations. So an example would be like today. So let's go down to the 5-minute chart. So today is Monday, and as most people saw, we took this opportunity today at 9:45 with this big pullback. And because this is Monday, we can make the assumption, because this market is trending and it's closing strong into the close, that this might be the week's low. So if this is the week's low, what we can do is we can keep drawing Fibonacci pullbacks. So now the 382 is in play, and I'll move our stop from here to here or here, and keep trailing and keep letting this trade ride as long as it can for the rest of the week. And this is another way of swing trading when you have a good opportunity starting off as a day trade. So that's another opportunity and example as well. But you need to do your due diligence and understand how you're going to manage your trade. Are you going to go to break even? Are you going to take some profits? There's multiple ways to do it. I hope this explains swing trading. And to summarize quickly again, we're looking for inflection point, support, and resistance on the higher time frames, the weeklies and daily charts. We want to enter in on a lower time frame and then hold it through the duration of the higher time frame for bigger, larger profits. And day trades can become swing trades if we have an opportunity where we're catching the low of the week or catching the high of the week. Then we can trail as the week goes on and extract as much profits as we can. Okay, guys, so I hope this helps. Please comment, like, subscribe, and enjoy the rest of your day. Thank you very much.